Good morning, students. Sorry, good evening, student, because I am also having classes on morning nowadays. So that was a practice that I am saying good morning. So good evening to everyone. I believe you are doing very good and studying very, very hard to achieve the goal of your life to become chartered accountant. I am CA Ankit Sharma in your this session of revisionary classes of PGBP. As we all know, the importance of this chapter, the PGBP chapter, is very, very important because it consists a lot of provision which is regarding how to calculate income under PGBP head. But also there are some additional sections which could be asked separately, like scientific research expenditure, like section 44 AD, ADA, partnership firm provisions, specified business section 35 AD, etc. And also because generally what I have noticed that the question number one, which is your compulsory question in descriptive section, the first question is compulsory in descriptive, which consisting of 15 marks, that is generally framed mainly on the basis of PGBP provisions. So out of that 15 marks part, I guess the PGBP part would be at least 9 to 10 marks. So it is a very important heads of income. If there is a question of calculation of total income or GTI or calculation of tax, so PGBP is going to be the main component of that question. So we have to be very, very careful when we solve PGBP provisions. It's a vast chapter consisting of many provisions. And if you will go through this chapter, there's a one characteristics that each section, or you can say individually, sections are very easy. The implication, the treatment is very easy. But when you have to apply the provision in a single question, then to recall all the sections and you have to apply them correctly in the question, that is an actual task you have to do. So there's only one thing you can do, that is practice. If you practice more, you will come to know about those deductions which are allowed or not allowed, the expenditure you need to disallow, the income you need to disallow, etc. So the more practice is the only way to learn these provision nicely or correctly implement them in the examination. So in today's classes, we will discuss some important provision like the basic performa of PGBP, additional depreciation concept, partnership firm concept, and you should also know if I guess you have gone through with the class which we held on 16th on this last Sunday from 3 to 5 p.m. In that session, we have discussed some very important thing for the purpose of examination. One of the important thing is when you start solving a question under income tax, under any head of income, first of all, you have to see whether do I need to solve it as per default tax regime or as per optional tax regime. Because under default tax regime, there are certain deductions which are not allowed. As I said, additional depreciation not allowed, scientific research expenditure in case of contribution for scientific research is not allowed, and so on. So it's very important that before starting any solution of any question, you have to be very careful to see which deduction is allowed depending upon which solution we are opting. Either we need to solve it as per default tax regime or as per optional tax regime. So the first step to check it out that do I need to solve this question as per section 115 BAC or opt out of it. Accordingly, we have to decide this particular deductions allowed or not allowed. If in a question it has been asked to calculate your total income in a most beneficial manner or to calculate your business income in most beneficial manner, then remember if section 44 AD or ADA concept is applicable, then you have to apply it without even specifically mention in the question. In the same way, if there is a manufacturing unit and you have purchased new plant and machinery, then you have to apply additional depreciation. If it can be calculated, you have to be calculated at your own. Even if the question is not saying directly to calculate it, but if the conditions are fulfilled on the basis of which we can claim additional depreciation, then you have to calculate it by yourself. I hope you understand what exactly we are discussing. So first of all, good evening, Mr. Lokesh. Okay. So moving on to the thing which we are going to discuss firstly, and that is the basic performa of PGBP, the format we have to follow. In this format, we will discuss those deductions, those are not allowed. We are going to discuss this format in a very short manner. After that, we will solve September paper PGBP question, then May 2025 PGBP question, then MTP, RTP questions, and some case scenario. So it will give you a technical knowledge that how to attempt the paper. How to solve is different, but how to attempt a paper is also an important thing. So you should know how to attempt a paper or how to attempt a question. So this is a performer for computation of income under the head PGBP. And this is under default tax regime. So you have to be very careful for providing specific deductions which will not be available under default tax regime, which is generally available under optional tax regime. So important points we are just going to discuss. We need to take the net profit as per accounting provision. Depreciation as per books of accounts, we have to add it back. We have to add the depreciation as per books of accounts because we need to calculate depreciation as per income tax provision. That is going to be reduced. Income tax, of course, direct tax is not allowed. If any paid, that needs to be added back. 30% of sum payable to resident. So there are certain payments on which there is a requirement of deduction and depositing of TDS. So if you do not deduct it or deposit it on that payment, the TDS up to the due date of ROI or up to the due date of TDS, as the case may be, then only you can claim 70% of that expenditure as a deduction. So remaining 30% is going to be disallowed. So this is connected with the TDS concept. You must have gone through the section 40A. Then if you paid any expenditure incurred in excess of market value and the payment has been made to the related person. So if it is so, the excess amount needs to be added back. Okay. If any expenditure or payment to a person in a single day in cash, etc., and if it is exceeding 10,000, the whole amount is going to be added back. There are certain sums payable by SSE which have not been paid during the relevant previous year. So there are certain expenditure like indirect tax, leave encashment payment. So that needs to be paid. Payment to provident fund, etc. That interest payment on any loan, etc. You have to be pay that up to the due date of ROI under section 43B. So if that has not been paid up to the due date of ROI, then you cannot claim the deduction. You can only claim the deduction in the next year in which that is going to be paid. MSME provision is very important. So you have to check that if there is a micro or small enterprises, the payment should be made as per section 15 of MSME Development Act, which has been discussed under section 43B. And remember, this is applicable only on micro and small enterprises. It is not applicable on medium enterprises. Personal expenditure, as we all know, not allowed. So this is a format which is in study and it is beautifully drafted. If you'll go through with these expenditure, what has been mentioned in this format, you will see almost 70 to 80% points actually those related to in which regarding the question would be framed in the examination. If you'll go through MTP, RTP, past year question, you will see that almost 70 to 80% actually points fall in this performer. Capital expenditure, not allowed. Repairs of capital nature, of course, not allowed. Amortization of preliminary expenditure, only 1/5 we can claim. So if you have claimed full value, 4/5 need to be disallowed. Family planning expenditure can be claimed only by a company. So if you are other than a company, proprietorship, partnership, etc., you cannot claim it at all. Any penalty for violation of law, you cannot claim it as an expenditure. If it has been claimed, needs to be disallowed. All expenses related to income which is not taxable under this head. So if you have claimed any expenditure which is not related to business head of income, so if that expenditure has been claimed, you need to disallow it. Any sum paid by SSE, this is also very important. A contribution is allowed up to 14% of the salary under new pension scheme. So if the contribution is exceeding 14%, the excess needs to be disallowed. So those were disallowed expenditure. Now there are certain expenditure allowable as deduction but not debited to P&L account. So there are certain expenditure which should have been allowed, but if we did not claim it yet, so we can claim it now. So these needs to be reduced. First one is depreciation as per income tax provision. In the second point, there was a concept which says 30% needs to be disallowed in case of TDS. We have just gone through with that point in above, that if TDS has not been paid up to the due date of ROI, then 70% only allowed, 30% is going to be disallowed. So that 30% is going to be allowed in the year in which the TDS has been deducted and deposited. So this 30% we are talking need to be allowed, which has earlier been disallowed. So it could be allowed in that year in which TDS has been deducted and deposited. Next is amount disallowed in an earlier previous year as per section 43B. So you may have seen that on above format, we have discussed that there are certain payment which is allowed on actual payment basis. So if the payment has not been made up to the due date of ROI, then you can claim that expenditure deduction in the year in which payment has been made. There are certain income which has been created in the P&L account, but it is related to any other head of income. So if there are certain income which has been included under our profit, which is or which needs to be included under any other head of income, so the impact of that income we need to reduce, we need to omit it from our profit. So that means the other heads of income, like dividend is the part of income from other sources. So if we have included that dividend income under our PGBP head, we have to reduce that value. Agriculture income, because it is exempt, so we cannot include it in our business income. We have to reduce it from our PGBP income. Interest on security, of course, income from other source, any profit on sale of capital asset, capital gain part. Rent is income from house property. This is our casual income. That would be part of income from other source. Gifts are exempted and part of other source, need to be reduced. Income tax refund, not as an income, so it's need to be reduced, and interest on income tax refund would be the part of income from other source. The interest component of this would be the part of only income from other source. So those heads of income or those income which are going to be included under any other specific head except PGBP, if that income has been included in the PGBP income, we need to reduce or remove that income from our net profit. There are certain income which needs to include. There are certain income under this head deemed to include. Just a second, students. Okay. So there are certain income which need to be shown under PGBP head. Like if you receive from your partnership firm. So from a partnership firm, as a partner, we generally receive salary, interest, and profit. So out of these three, salary and interest need to be included under my PGBP head. The allowable portion of salary and interest needs to be included under my PGBP head, and profit is going to be exempted. So that cannot be the part of my income. Bad debts, if recovered, would be the part of PGBP income, and so on. Remission or cessation of any trading liability needs to be included under my PGBP head. So this is the basic format which need to be followed while calculating PGBP income under default tax regime. Now, what is the difference between default tax regime and optional tax regime? Let me tell you, it is very, very, very important to always remember those deductions which would not form part of my default tax regime, but would be claimed or can be claimed as deductions or expenditure under optional tax regime. The first one is additional depreciation. We can claim 20%. and the balance 10% of any preceding year we can claim if that asset has been used less than 180 days in the preceding year. So the balance 10% we can also claim in this year. As I have told you, if the information has not been given directly in the question, if the question does not ask you to calculate additional depreciation, but there is applicability, there is manufacturing unit, printing unit, etc. There is new machinery purchased, used for factory, etc. So if all the condition of additional depreciation calculation has been given, you have to calculate it at your own. There are certain deduction like section 35AD, which is not allowed under default tax regime, but you can claim those deduction under section optional tax regime. You can claim that. So remember, section 35AD business deduction can be claimed under optional tax regime as well as scientific research. Now, in case of scientific research expenditure, there are technically two kinds of expenditure. This is very interesting and of course, very, very important for the purpose of examination. There could be an in-house scientific research. Scientific research expenditure on in-house scientific research expenditure, or there could be contribution for scientific research. So if the expenditure has been done on in-house scientific research, either it could be revenue expenditure, it could be capital expenditure. This is generally contribution. So this contribution expenditure is allowed only under optional tax regime. And in-house expenditure on revenue or capital allowed under both regime. So always in the question check that if it is in-house research expenditure of scientific research, whether it's revenue or capital, you can claim the deduction under section 35 under both regime. If it is contribution, then only under optional tax regime you can claim this reduction. Okay, anyone can you tell me which expenditure need to be excluded from capital expenditure in case of scientific research? All capital expenditures are not allowed. One specific capital expenditure needs to be included under both regime. You cannot claim that expenditure under scientific research capital expenditure. Let me see. Somebody answered it. Almas said land, correct. Kushi is saying purchase of land, very good. Lokesh is saying land, very good. Exactly. So if excluding land, we can claim all capital expenditure under both regimes. So scientific research is having very interesting provision. If in-house research, both regime allowed. If contribution case, only allowed under optional tax regime. Correct, Shagupta, you are also correct. So these are key PGBP deductions not allowed. So these are deductions not allowed under section 115 BAC. Additional depreciation, scientific research expenditure, and which scientific research expenditure in case of contribution, not for in-house scientific research. Capital expenditure on specified business. Deductions under SEZ unit, section 10AA, and brought forward losses if that arise due to allowability of these deduction. So you should make short note for every chapter. Every chapter you should make a short note that under default tax regime, these are not allowed. You must have gone through with salary topic also. Under salary head also, there are certain deductions not allowed under default tax regime. So please, it's my advice, before every chapter, you have take a special note or additional page and write it down in this particular chapter, which deduction would not be allowed under default tax regime, etc. So at the time when you will start solving any question, you would automatically recall that these deduction would not be allowed if I'm solving this question under default tax regime, or it would be allowed if I'm solving that question under optional tax regime. Like this, certain deductions, and this kind of provisions has been given in study material in each chapter separately. So please combine them, make a note, and kindly stick it on the first page of your chapter. Like certain deduction 10AA is not allowed, 32(1)(2)A not allowed, Reduction in respect of contribution for scientific research not allowed. Section 35 AD deductions not allowed. Let me share you one more. So this is the diagram which is also specified in your study material regarding the allowability of expenditure in case of scientific research. And you can easily see allowability in-house research expenditure for scientific research. If it is in-house scientific research expenditure, if it is revenue expenditure, allowable as deduction under section 115 BAC, allowable as deduction under optional tax regime, under both. Any capital expenditure other than the cost of land, again it is allowable under optional as well as default tax regime. And you will notice the contribution case, in the case of contribution to outsider, if it is not in-house research center, then under 115 BAC, it is not allowed at all and allowed under optional tax regime. So this, everything has been given the study material. You have to go through it. Illustration number 5 also explain the applicability or the solution. This is also from your study material. You can go through with illustration number 5. And in that illustration, you will see that in-house scientific research expenditure is allowed under both regime. And the payment for contribution is not allowed under default tax regime. This is in-house allowed in both regime. And this is contribution not allowed under default tax regime. So I believe you must have understood what I was just trying to say you, that under PGBP Act, be very careful about the expenditure. Now solving question one by one. First of all, I'm going to solve MTP 1 question. This is descriptive question number 1. In the PGBP, it's very logical. If you'll go through with each point logically, you would be able to solve that question easily, because every point is a separate or individual solution. So question number 1, we are going to solve. This is question, and as I have told you, the compulsory question probably would be whether it's from GTI calculation, TI calculation. Most of the components are related to calculation of PGBP. As we are seeing in this question, the first thing needs to check first. And the first thing always needs to check is this: whether do I need to solve any question with normal tax regime or default? And you can say, compute the total income and tax payable by Mr. Brajesh for assessment year 25-26 under default tax regime and normal provision of that. So we have to calculate the income and tax. So we are going to calculate only the PGBP income under both head. Information has been given. So under default tax regime, Mr. Brajesh has set up a unit in special economic zone in May 2017. Why this date is relevant? In case of a special economic zone, we should automatically recall that there could be a deduction allowability under section 10AA. And 10AA is not allowed under default tax regime. This deduction you cannot claim under default tax regime. But of course, because we need to solve this question under optional tax regime also. So can you tell me the relevance of this date, the date of start operation of any unit in special economic zone, how it will impact my answer? Which year MTP is this paper? This is mock test paper series 1, March 2025. Okay, Lokesh? So can you tell me what is the relevance of this date in case of SCZ business setup? Who will tell me? Does it have any impact? To calculate first 5-year 100%. Very good. Mrs. Gayatri is correct. Because for first 5 year, we can claim 100% of the profit deduction based on a formula. And for next 5 years, we can claim 50%. So because it is 2017 and we are in previous year 2024-25. So the 5 year first part has been already gone. So these are my next 5 year in which deduction would be 50%. So 50% needs to be taken when we are going to calculate section 10AA benefit. But because we are solving it as per DTR, there would be no section 10AA deduction would be applicable. So Mr. Brajesh has set up a unit in SEZ. The total turnover, export turnover and net profit for the year is 120, 45 and 7.5 lakhs. So the PGBP of this business, PGBP of section 10AA business is 7.5 lakh. 10AA not applicable. So my profit of this business would remain 7,50,000. Out of the export turnover of 45 lakh, only 40 lakh has been received in convertible foreign exchange by 30th September 2025. So this information would be relevant for optional tax regime, but not applicable for default tax regime. So when we will solve this question as per optional tax regime, then we will find it out the deduction under section 10AA on the basis of the information given. Let's escape it right now. The second business, during the previous 24-25, Mr. Brajesh has commenced a business of warehousing facility for storage of food grains. Now, warehousing facility for food grains is a specified business under section 35 AD. But again, section 35 AD is not, deduction is not available under default tax regime. For the purpose of default tax regime, this business would be a normal business. So normal business provision would be applicable. So he has one business, that is PGBP under section 10AA. Second is warehousing business. So we have to calculate the profit under warehousing business provision. And you can see the net profit has been given in this business 8,50,000. This is a kind of a question which could be easily asked in your examination. These kind of question is going to be asked. After this MTP1, MTP2, we will solve May 2025 and September 2025 question of the examination, and you will see those questions are easier than this question number 1. So this kind of question is going to be asked in the examination. You just need to follow the steps. Follow the step, apply the provision, and this question number 1, which is compulsory always in the examination, it would be solved easily. Just do not panic. Focus which point you are solving. Focus on that point, and every information could be relevant. Now, the following items are debited to profit and loss account. So, chalo, solve it with me. The first point is personal drawing. What should I do with this personal drawing? Tell me, student, what should I do? Do I need to add it, or do I need to reduce it, or I should not do anything? Only 3 options we have for all expenditure, all the information which is given in the question. Either do I need to add it back, or reduce, or I need to ignore it. That's it. Only 3 treatment could be there. Yes, Shugufta, first 50 year. Almas is saying add back, and Mr. B Reddy is saying add back. Of course, because it is personal expenditure, cannot be claimed in the profit and loss account. Add back 70,000. Advance income tax paid 1 lakh rupees. What do I need to do? Add, reduce, or ignore? Of course, add. So advance income tax need to add back. Next is purchase of warehousing building of 10 lakhs on 10/6/2024 for the purpose of storage of food grains. What do I need to do? Tell me. What is the implication of this information given in the question? Purchase of warehousing building of 10 lakhs on 10th June 24 for the purpose of storage of food grain. Mr. B. Reddy said add back and claim depreciation. Correct. Because if it is optional tax regime, then we can claim full deduction of this under section 35 AD. But because we are under default tax regime in which section 35 AD does not exist, so it would be a normal building, and normal building we have claimed as full value as an expenditure, which is not correct. So we have to add the purchase value of building plus 10 lakh, and we can claim depreciation on it at the rate 10%. Building depreciation rate 1 lakh. Anything is difficult till now? Nothing. Now there are certain incomes have been given which is already credited to the profit and loss account. So if these income does not related to my business, I have to reduce them from the profit because they have already become part of my 8,50,000. Those should not. Interest on saving bank account, that would be income from other source. So what do I need to do? I need to reduce this income. Because income from other source, exactly correct, Mr. Ram. Interest on fixed deposit, again income from other source. Dividend from Indian company, again income from other source, need to reduce. There is other information regarding working partners. So the information regarding warehousing business is completed. So my net profit as per income tax after adjusting all these expenditure income would be 1,853,000. This is my second income from warehousing business. Now, Mr. Brijesh, also a working partner in MS Neil Kamal Associate, a partnership firm. Mr. Brajesh has contributed 15 lakh as capital in the firm. Further, partnership deed authorized payment of interest to partner at the rate 13% and also payment of remuneration to partners at the rate 20,000 per month. Whole of the remuneration is allowable as deduction to Messrs. Neil Kamal Associate. So as we discussed, whatever you receive from a partnership firm, so now this is also going to be taxed as his business income. This is again PGBP from firm. So the question says that the salary was 20,000 per month. So it would be 2,40,000 and it has been fully allowed. The allowable portion is going to be taxed in the hands of partner individually as business income. So 2,40,000 is going to be taxed, and interest has been paid at the rate of 13%. So the allowable interest would be only 12%. The 12% interest on 15 lakh of capital, which has been given in question. The capital is 15 lakh. So 12% of it we can only consider as allowable portion of interest. That would be 1,80,000. No, not 1%, Mr. Ram. 12% needs to be considered because the provision is whatever is allowed under partnership firm. So under partnership has claimed 12% deduction of the interest. So 12% needs to be included in the hands of the partner. So the allowable portion of salary and the allowable portion of interest we can claim as income in the hands of the partner. So from the partnership firm, the taxability would be this value. The total PGBP income after including the section 10AA business, the warehousing business profit, and this 240 and 180, this would be 4,20,000. After adding all, the total PGBP income would be 3023,000. Clear? Mr. B. Reddy, you have to include 7,50,000 also, which has been a special economic zone business. So total 3 business head income. 750, 18,53,000 and 4,20,000. Then that would be my PGBP, 30,23,000 rupees. That would be my PGBP. Now under optional tax regime, we have to just provide those deduction which has not been allowed under default tax regime. So we can take this PGBP income, PGBP as per default tax regime, and we can make adjustment in this. So as per default tax regime, my PGBP income is 30,23,000. Now we can claim section 10AA deduction of SEZ. The formula is 50% of P profit into export turnover upon total turnover. Now 50% of profit was 7,50,000. And if you'll see the question says the export turnover was 45 lakh, but out of that 45 lakh, only 40 has been received in convertible foreign exchange. So this is the definition of export turnover. Whatever you will receive from export sale up to 30th September 2025 would be considered as export turnover. Total turnover was 120 lakh. So the deduction would be 1,25,000. The 10AA deduction would be 1,25,000. Then because of warehousing business, we can claim section 35AD business deduction. And it says you can claim full value of building deduction. So building deduction would be now 10 lakh we can claim. But the depreciation what we have already claimed under default tax regime, that needs to add back because we have claimed 1 lakh over there. Now we can claim 10 lakh and we have to add back the depreciation what we have claimed under normal provision of the Act. So the aggregate or the PGBP as per optional tax regime would be now 19,98,000. So this is my PGBP income under optional tax regime. This would be my PGBP income under default tax regime. Understood? If you will go through with each information which has been given in the question, and please recall the provision before applying that. That would not be difficult that you are not able to find out the correct business head of income. It is not difficult at all. There are 2 main reasons. Because of that, you actually do mistakes. The first reason is you generally, what happens? Generally, we got nervous. During our examination time period, when you are in that classroom, we feel nervous, and because the question is compulsory and 15 marks, it looks huge in front of you. The whole PGBP, additional information, etc. has been given. So generally we feel nervous. That's the one reason we do mistakes. On those points, those are easy. Still we do mistakes. And the other thing that we do not recall the provision. We just read the question, we start solving it. Once you read the provision, you have to recall the provision which should be applicable in that case. You can see in this example, when there was information regarding partnership firm. So you can recall once that in case of partnership firm, what is taxable in the hands of partner? The salary and the interest. And what amount do I need to tax? The allowable portion of amount I need to tax, the allowable portion. So as if you taxed 1% of the interest, that is the disallowed portion. So that would result in wrong answer. So allowable portion is 12%. So I need to include under partner individual head 12% of that interest portion. So just read recall, and then implement. That is exactly the process you should follow in the examination. Okay. So next is MTP2 we are going to solve. Nagaraja is saying total PGBP 2273. How it is? Out of 30 lakh, you need to reduce 125 and 10 lakh. This is 10 lakh. This is not 1 lakh. And then you need to add 1 lakh. So it would be, I guess, yes, 1990 it would be, of course. Chalo. Next, moving on the second MTP question. Question number, first descriptive question, of course. Now, this is a question of income and expenditure because it is based on receipt and payment. So you can see Mr. Vivek is an advocate and furnish you the receipt and payment account for the financial year. As you must have gone through in your normal LVC classes, the faculty must have told you that if there is a profit and loss account has been given, then the process of solving that question that you need to take the net profit which has been given in the question and you need to add back the disallowed expenditure and need to reduce the disallowed income, so on. So then you will find your net profit as per income tax. But if a receipt and payment has been given, that means cash system of accounting must have been implemented. In case of receipt and payment, if given in the question, then we need to solve that question by considering only allowable income and allowable expense. So we make an income and expenditure out of it. We consider only allowable income and allowable expenditure. We need to take only those income which should be part of my PGBP. What we do in normal question, from net profit, we remove the effect of those expenditure which are not allowed under PGBP and the effect of those income which should not be the part of my PGBP. In normal case, we do that. But in case of receipt and payment, we have to do what? We have to only consider that income. Those are part of my PGBP and only those expenditure, those should form part of my business expenditure. Understood? Let me tell you what is the difference. In case of normal P&L account has been given. So this is net profit as per accounting provision. And we have to find out income tax net profit. So what we do actually from this profit, we remove disallowed expenditure by adding them. As per income tax, those are disallowed expenditure we need to add. And those are disallowed income, the income which should not be part of my business income, like income from other source, casual income, capital gain. And I need to reduce disallowed incomes. So from this net profit, if I am disallowing expenditure as per my income tax, and I am reducing disallowed incomes as per income tax, so what does that mean of net profit? So this net profit consists only allowable income as per income tax and allowable expenditure as per income tax, because we have removed the effect of disallowability. So what is the technical meaning of this profit? This profit consisting only incomes under PGBP and only expenditure as per PGBP. Exactly what we are doing over here. So intention is exactly same. We have to find out a profit which only include business head of income and business head expenditure. So if receipt and payment has been given, Then we have to, because under receipt and payment, there would be opening cash balance, closing cash balance, etc. So there is no net profit, etc. So we need to follow this format. What we will do, we will only consider allowable income as per PGBP, and we will only consider allowable expenditure. So technically, if you are only considering allowable income and allowable expenditure, so what you will get at the end? At the end, you will get a net profit which have only allowable income as per income tax and allowable expenditure effect. That is what we want in P&L also. So the thing is same. It's just the process we have changed. In P&L, there would be a profit, so we have to add back and minus. That would be easy because less amount needs to add back and less amount needs to add back, reduce. But in case of receipt and payment, this process is easy. Consider only incomes, those are allowable business income, and reduce only those expenditure which is connected to my business. So the answer would be remain. In both cases, the intention to drive the profit is same. Now you will see in case of this question, this is my receipt side. So do I need to take opening balance of cash and bank? I need to consider only current year income and current year expenditure. So the opening balance of 80,000, should we consider it as my income of current year? Is this my current year receipt or not? Gayatri is asking, sir, any step mark provided even not getting final answer? Yes, there would be step marking. Do not worry. Mr. Nagaraj is saying no. Mr. Rama is saying no. Exactly, because this is the accumulate of cash balance. It does not actually have anything which is connected to current year. So we will skip this information. We do not need it. Fees from legal service. This is my business income technically. So I will consider this is my as receipt income. 49 lakh 60,000. Motor car loan. Loan is my income. It's my liability. So will not consider it. Sale receipt of 5275 listed equity shares. That would be my capital gain receipt. So not my business head of income. So not need to include it. So receipt side is only having these four information, out of which only one was relevant for the purpose of my provision. And we have considered it. That was 49 lakh 60,000. Any issue? Any problem? No. Now we will need to see those payments which should connect with our business head of income. Staff salary and bonus to clerk. Of course, that would be the part of my business expenditure, 17 lakh 50,000. Other general and administrative expenditure. Yes, it's also my business expenditure. 22 lakh. Office rent, of course, my business expenditure, 1 lakh 48,000. Life insurance premium. Is it my business expenditure or personal expenditure, students? What it is? Personal or business? Life insurance premium. It is personal, correct, Mr. Nagaraja? It's personal expenditures, so we should skip it. Motor car. Now, motor car, we should not consider. We need to consider the depreciation of motor car. So for that, we have to see the additional information also once, because in generally, in these kind of cases, there would be information like this motor car would be used for some personal purpose and some professional purpose. So we have to see that. So motor car acquired in January 2025 by way of NEFT, 9,50,000. And if I'll check in the question, generally for motor car, it is always there. that some part of motor car has been used for personal purpose. Motor car was put to use for both official and personal. 1/3 of the motor car is for personal purpose. No interest on car loan was paid during the previous year 24-25. So 1/3 of the car is for personal. So how much of the depreciation of this car we can claim? 2/3 is for business purpose. 9,50,000 purchased in January. The DAP rate of car is 15%, but because in January 25 less than 180 days, if it is less than 180 days, 50% of DAP we can claim. So whatever would be the DAP, only 2/3 we can claim in this year. So that would be 47,500. ठीक है? If it was Keyman, we can include, sir. Yes, if it was a Keyman insurance policy premium we have paid for the purpose of any employee, then we could claim it, of course. Book bought by way of account paycheck in the month of May, June, and September 2024 annual publication. So, what is the DAP rate on books if it is an annual publication? The 40% rate you need to apply, that would come 32,000 rupees. Computer acquired on 1st November. And again, less than 180 days. So normal rate of computer is 40%, but we can claim only 20%. So that would result in 10,400 rupees. Next is domestic drawings. We will skip it. Okay, this is a personal expenditure, so no need to do anything. Motor car maintenance. So all car expenditure we can claim only 2/3. Maintenance expenditure was 72,000. 2/3 would be 48,000. Public Provident Fund, not a business expenditure, skip it. Closing balance, skip it. Now we need to check the additional information. This information is for capital gain purpose, not for PGBP. This for PGBP, we have considered it. Again, this is from flat, etc. Income from house property information is there. There is a speculation loss. This is for set of provision. 120 earned in speculation business and lost 118 speculation business. So out of this 120 loss can be set off, 60,000 can be carry forward. So this would be a topic of set off of losses. No other information regarding Vivek gift a chat, contribute PM, donation, political party, cash system of accounting, etc. No other information regarding PGBP. So the amount of profit after doing all this income and expenditure would come to 724100. 7,24,100 rupees would be my profit from this profession. Now, as I have told you in the starting of the class, if there is possibility of section presumptive taxation scheme applicability, you can see in this example, it's a professional example, advocate is a professional, and 44 ADA is applicable because receipt is less than 50 lakh rupees. So if receipt is less than 50 lakh rupees, you can apply or you can pay tax by way of section 44 ADA, which says 50% of the receipt can be declared as your profit. So 50% of the 49,60,000 would be 24,80,000. So either you can declare your net profit, you can pay tax on 24,80,000, or you have option to declare your profit is 7,24,100. Which option you will prefer, student? Do you want to pay tax as per normal provision, or you want to pay tax as per presumptive taxation scheme. So of course, everyone would like to pay tax as per normal provision, but there is a crux. If you are carrying a profession and if presumptive taxation scheme option is available because your turnover is less than 50 lakh. And if you show the profit less than 50 lakh rupees, you can see 50%. So if you are showing your profit less than 50%, as we are showing it, because we will declare the profit 7,24,100, then you have to maintain books of accounts and you have to conduct audit also by a CA. So these two conditions need to be fulfilled. Now, this kind of information, you have to write it down in your examination. That in this case, either we can declare our profit 7,24,100 or we can declare our profit 24,80,000 under presumptive taxation scheme. But because assessee will go, of course, for 7,24,100 because we have to minimize the tax liability. But to fulfill this condition, to declare the profit as 7,24,100, which is your real profit, you have to maintain your books of accounts and you have to conduct an audit. Only then this profit would be accepted by the income tax department. So these kind of information also need to be mentioned. So be very careful about these kind of information. You can see in the solution, it has been written directly. So in MTP, you can see that this requirement would be there in the question that you have to write it down regarding this solution. Okay. So we have discussed MTP1 question, MTP2 question. Now it's the time to discuss May 2025 question. So that would actually, you can see what kind of question could be asked in the examination. So this is our descriptive question, question number 1. Mrs. S.C. Bose. I always believe then when there is a question in front of you and when you are reading it, kindly mark the important point you think that could be important for the purpose of your question. Like in this case, you can see Mrs. R.C. Bose, age 62 years is given. So you can just mark it. Maybe it would be helpful because age is relevant in case of income tax in certain cases for applicability of exiting his service in 2011. She earns income from business of running a flower book boutique shop at Kolkata and income from royalty from writing books of science and sales in India and abroad. Profit and loss account for the year ending on 31st March 2025 has been given below. So age flower shop and also in writing books of science and sales in India and abroad. So one by one, we are going to solve the question. And you can see particulars have been given, opening stock, closing stock, the normal information. I generally, when I was a student of CA, when these kind of question was there, so I generally do one more thing, the additional information which has been given after the question. I used to tick those points in the question which is relevant for this additional information. So that would be really helpful, or you can solve additional information later at once also. Both the things are possible depending upon your way of solving the question. So first of all, we have to take the net profit, which has been given is 20,69,000. To see whether do I need to solve this question as per optional tax regime or default tax regime. So the question is saying calculate total income of Mrs. S.C. Bose under default tax regime and optional both. So profit has been given. Now we'll move on to the credit side first. First of all, you always need to solve the credit side because there are less provision and easy provisions are there. Then debit side and then the additional information. This is the correct way of solving the question. Sales of flower boutique, of course, allowed. Full would be allowed as a income. The family pension, that would be form part of income from other source. So we have to reduce it. The family pension is 3,60,000. Royalty from California University for books sold. Foreign exchange brought into India. Now you can consider royalty income as a business income, or there's an option that you can consider this royalty income as income from other source. Both option is allowed. If you will consider it as other source, then you have to remove this income from credit side, and the expenses related to royalty also need to remove from the debit side if you assume it as an income from other source. But if you assume it as a other normal business, then we will not going to do anything with the income of royalty and the related expenditure. So I am considering it as my business income. So I am not doing anything. Dividend is income from other source. We have to remove 4,50,000. Interest is income from other source. So write it down in the examination also, this kind of information. So when you need to calculate income from other source, you should know what kind of income do I need to consider. So you will not escape any income by mistake. So that would also be there, 76,000. Closing stock, of course, would form part of my income, not need to do anything with it. Now the expenditure part. Opening stock is, I am okay with it. Purchase, okay. Salary, wages. Now expenses relating to books authored. Because we consider this royalty as business income, so the expenditure would be normal allowed expenditure. Otherwise, it would have been disallowed. Expenses in connection with dividend. So it would be reduced because it should go in income from other source. Needs to add back. Repair and maintenance, it would be a business expenditure, not a problem. Now you can see amount paid to IIT Chennai for scientific research project. We have discussed this point today in the starting, that for scientific research, if the payment has been made, if that is not in-house research expenditure, that would not be allowed under default tax regime. So this 35,000 is not going to allowed under default tax regime. This would be allowed under optional tax regime. Computer and electronic items purchased on 1st December 2024. So we have included that full in as a cost, but we have to claim depreciation on it. So 4,50,000 I have added back. Depreciation we will calculate at the end. Net profit is there. Now one by one we will read the additional information, and you can see purchase includes 2 lakh related to flowers and creepers directly purchased from a farmer in cash. 26 September 2024. The payment has been made 2 lakh rupees. So is it allowed or disallowed, students? Is it allowed or disallowed? Allowed is Lokesh is saying allowed, and Ram is saying allowed because direct purchase from farmer. Almas is saying allowed because payment is made to farmer. Very good, Sid. Very good, Khushi. Well done. Yes, because the payment has been made to a farmer, and that is an exception under rule number 6DD. Generally, payment exceeding 10,000 is disallowed, but this is rule number 6DD, which says that in case of payment to farmer, you can make payment unlimited amount. There is no limit. There is no restriction like 10,000. So we do not need to do anything with this point. Repair and maintenance includes one-time deposit of 2 lakh paid to electricity and water. This is deposit. Deposit means something we cannot say is an expenditure, which is going to be refunded in future. So if there is security deposit, there's any kind of deposit, there is any kind of advance, that does not mean that that is an expenditure. So we have claimed it as an expenditure. We have to add it back. So this is repair and maintenance deposit value, 2 lakh rupees need to add back. Moving ahead. Computers and electronic items. So the computer we have purchased was 4,50,000, and that was in, I guess, December. Now provision says for the purpose of depreciation, computer and other electronic items includes 1 lakh paid for television and washing machine for her household use. So out of this 450, 1 lakh is for household. That means personal expenditure. We have add back the full value of 450. So already 1 lakh has been disallowed. So on the balance of this, that means balance 3,50,000, we can claim depreciation only. It has been purchased in December, so less than 180 days of use. And on computer, the DAP rate is 40, but we can claim only 20% because less than 180 days. So the allowable depreciation would be 70,000. I hope it's clear till now. Salary and wages includes salary paid 2,40,000 to her illiterate brother. Reasonable salary as per market rate is 180. So the excess payment needs to be disallowed. Payment to a relative exceeding the market value, that would be 60,000. Add back. Now she purchased the residential house 110 lakh, for which loan of 75 lakh was taken, etc., etc. No principal interest. This is for house property. She purchased an electric vehicle on 30th September 2024. Important thing is this point. You can see ground floor of the house was used for shop and first floor was occupied for a residence. So student, PGBP provision included because ground floor of the house was used as shop. So we can claim deduction as well as we can claim interest portion also. So first of all, we have to solve point number 5 provision. So purchase the residential house for 110 lakh, for which loan of 75 lakh was taken from SBI. Accrued interest was 337,500 till 31st March 25. So the interest is 337,500 for both floor, ground and first floor, which was paid on 10th April 25. That means after the end of the financial year. Now this is related with section 43B. If you remember, interest payment would be allowed if the payment is up to due date of ROI. And the payment has been made on 10th April 2025, which is before the due date of ROI. So 50% of this interest would be allowed under business because ground floor has been utilized by the assessee for shop. So 50% of it would be 168,750 is allowable as interest because the payment has been made before due date of ROI. No principal amount and interest was paid by Mr. S.C. Bose till 31st March 25. Not a problem. So this would be interest treatment and now the depreciation. House value was 110 lakh. Half value for business, that means 55 lakh. And 10% of it we can claim as a depreciation, that would be 5,50,000. So for the purpose of this point number 5, we have two benefits. One is interest. That would be 1,68,750. And one is depreciation, which would be 5 lakh 50,000 rupees. So very relevant information. So initially, if you'll go through with this information, you might think this is related with house property. But the last line, only one sentence is important. You can see ground floor of the house used for shop. If you skip this information, you have to skip some marks also in the examination. So you have to read very carefully. She purchased an electric vehicle on 30th September 24 for 25 lakh for business. So we can claim the depreciation on it at the rate 40%. So depreciation would be 10 lakh rupees. On 25 lakh, it would be 40%, 10 lakh. So depreciation on electric vehicle, that would come 10 lakh rupees. I guess we have done everything. Now let's calculate the profit with the information. 2069 minus 360 minus 450 minus 760,000 plus 12,000 plus 35,000 plus 450 plus 2 lakh minus 70,000 plus 60,000 minus 168750 minus 550 minus 10 lakh. So that would be 151,250. This is my business income under default tax regime. So now can you tell me, if I'll ask you to calculate income from the information given over here under optional tax regime. For optional tax regime, the PGBP from default tax regime we have to take. That would be 151,250. Now, can you tell me what changes we have to do to find out the business income under optional tax regime from the information that is given over here? Can you suggest me what do I need to add back or reduce for finding out the income as per optional tax regime out of the information given? Yes, Mr. Ram, you are absolutely correct. Almas also correct. Khushi is also correct. So what do I need to do? How much do I need to add back or reduce for research? So this saying add back IIT research. Tell me the amount and the treatment. Do I need to add it back or reduce it from my default tax regime profit? Ram is saying less 35,000 rupees. Anyone else? Do we need to less or add back? The scientific research expenditure was 35,000. So Siddh is saying 35,000 add. Okay. What is your opinion, Khushi, Almas? 35,000 need to be add back or reduce? Khushi is saying deduct. Almas is saying less. Exactly correct. All of you are correct except this. Who was that? Siddh was wrong. Siddh, you have to understand. We have disallowed this expenditure over here. This 35,000 cannot be allowed under default tax regime, which is allowed under optional tax regime. So if that is allowed, so we have to reduce it. We have to reduce this 35,000 from my profit to find out the optional tax regime business income. That would be 116,250. That would be business income under optional tax regime. Understood? So that was a May 2025 question, what we have just solved it. And you should understand that if you are going to take one by one the provision, apply and recall the concept and apply it perfectly, then that would not be difficult that you are not able to solve this question. So in my opinion, in this solution, credit side and debit side solution is very, very easy. The whole problem, or there could be any problem, would be on the basis of additional information. Now tell me, do you find this point number 1 difficult? It is so simple. Is point number 2 difficult? It is so simple. It is deposit. Need to add it back. Is computer information is difficult? 1 lakh is for personal purpose. So on the remaining, we have to charge depreciation. Salary wages point is again very simple. We all know that if payment to a related exceeds the fair market value, that's difference needs to add back. Yes, we can say this fifth point is tricky because if you are going through with this point, in the starting, you will feel a residential house. So you may skip this information that it is nothing to do with my PGBP. This is a part of house property, but that's very important that any information which is given in the question could have any role in the solution. So you need to read the full information even when you are feeling that it is not relevant for my PGBP, because this only a certain line, there are few words which actually make us understand that yes, there would be some implication under PGBP head also. So the interest part and the depreciation need to be calculated. Depreciation on electrical vehicle, is it anything difficult in this? So now you can see from point number 1, 2, 3, 4, 5, and 6. Out of this 6 additional information, only one was little tricky. And that is also tricky if you are not going to read it. If you read it, then you know, okay, 50% debt I need to calculate and 50% interest I need to apply. That's it. What is difficult in solving this question? Tell me. Nothing. That is just the nervousness, the tension, controlling of nerves. Maybe that is the main reason we are not able to solve these kind of compulsory huge question in the examination. So we are actually solving May 2025 descriptive question number 1. And you can see there is no point which is very complicated or difficult. You can see that it is as simple as that. Apply the provision, you will find out the correct answer. Understood? Mr. Ram is saying, sir, should we memorize all depreciation rate? How many depreciation rate do we need to memorize? Like plant and machinery, it's 15%. Computer again, 40%. Furniture, 10%. Building, 10%. That's it. These are the main rates upon which question needs to be formed. Electric vehicle, 40%. So yes, you have to memorize not the all, but these are the relevant depreciation rate. 5 or 6 dep rate you have to remember only, not more than that. Mr. Nagaraj is asking, sir, why not add vehicle 25 lakh? Good question, because this vehicle value has not been mentioned in the PGBP anywhere. That is an additional information. That means if this vehicle value has been added over here, suppose 25 lakh in this, then I am going to add it back. Now, that was additional information that they have just informed you that we have also purchased a electric vehicle, but that has not been claimed as deduction under PGBP yet. So only we are considering its depreciation. Suppose this computer also not including in PGBP. Suppose these are also given as the part of additional information. Then we are not going to add 4,50,000. We are only going to claim the depreciation of 70,000 because it has been included as an expenditure, as a capital expenditure. So we need to add it back and not in the case of motor vehicle. Okay, Mr. Nagaraja. So why, you understand why computer value added? Because it has been claimed as an revenue expenditure in P&L. That's why we need to add it back. Sir, how 40% comes? It's a depreciation rate on electric vehicle, that is 40%. So 25 lakh, 25% or 25 lakh, 40% would be 10 lakh rupees depreciation. I hope it's clear till now. Anything else you want to ask? Because now we will move on to solve September 2025 PGBP question, or you can say descriptive question number 1. And because it will take at least 20-25 minutes, so I just wanted that we should take a break before, and then after the break, we will going to solve it. So if you have any query regarding PGBP, etc., then you can ask me. Else we will go for a break, and then when we will resume, we will discuss that September and then some case scenario and then some RTP question left. Any query, students? I guess no SH queries. So, Mr. Bhargav, can we go for a small break? Okay. Bhargav sir, can we resume? Bhargav sir? Good evening, everyone. Once again, welcome back. So I believe you must have your tea, coffee, etc. So we were discussing the revisionary provision of PGBP, in which we have discussed MTP questions, RTP question, the basic performer, additional depreciation clarification, those deduction not allowed under default tax regime, and we also solved May 2025 question paper. Mr. Nagaraja is saying, if I am compute taxable income, both regime 115 BAC and optional in two columns, you have to show the separate calculation. You can go through the study material question solution performer. So you would be able to understand. Don't make two columns, solve separately. First solve uh, default tax regime answer of total income and that calculate tax liability, and then separately solve optional tax regime provision. Shagufta is saying, sir, can you please briefly explain of depreciation provision, because I tried to understand this provision 3-4 times, but I don't know why I did not understood. Matlab, Shagufta, you are asking depreciation provision in the question we are solving MTP, or you just want me to discuss with you the depreciation provision of the chapter in brief? So if you have any problem in these questions, what we have solved in depreciation, that I can tell you again. But I'm not getting it. You want the whole depreciation provision in brief? That would be very difficult because we have to solve question. But depreciation provisions are easy. No, not in this question. So you want the whole depreciation provision from the chapter in short. How it is possible, Shagufta? It needs a lot of time, and we need to solve some more question, etc., because that would be very unjustified with other students, that if I'm going to solve depreciation provision only for you. But let me tell you one thing, depreciation concept is very easy. In short, if you want to understand, first of all, okay, let me tell you how do you need to understand that depreciation concept. First of all, understand the concept of block of asset. First of all, you should understand the definition of block of asset. Maybe this is the problem, that you are not understanding the block of asset concept. Go and read the block of asset concept once. What is the meaning of block of asset? It says the asset those rate of depreciations are same needs to be the part of the same block, and their individual identity cease to exist. So once you will understand the concept of block of asset, then you should understand the depreciation rate. Either depreciation would be charged full rate, whatever is the rate, like either if the depreciation rate is 15%, so either under income tax it would be charged at 15% or 50% of this 7.5%, or there would be no depreciation. So what are the condition in which full rate of depreciation would be applicable? What are the conditions when half rate of depreciation would be applicable? And what are the conditions when there would be no depreciation? You have to identify these three cases. That has been given in the study material also. And the third case is the format. This is very important. We have to take WDV of block of asset having same rate of depreciation. Then we have to add actual cost of the asset purchase, actual cost of asset purchase and put to use. Both conditions should be satisfied. It should be put to use in previous year. If it is not put to use in previous year, then you cannot claim the depreciation on that particular asset. Then we have to reduce money received in respect of any asset sold, destroyed, or discarded. After reducing it, this is the WDV on which depreciation need to apply. There would be either full rate of depreciation, as I have discussed, or maybe on some part, half rate of depreciation need to apply, or maybe there would not be any depreciation on some particular asset if that has not been put to use. So if asset has not been put to use, it will not form part of my depreciation format. So there will not be any depreciation rate. So try to read the provision. Like in this step, first of all, go and understand the concept of block of asset and solve the illustration which has been given in the study material. Then understand the applicability of rate. In which situation full rate of depreciation would be applicable, in which situation half, and when there would not be any rate of depreciation. So these rate would be applicable when not put to use. If asset is not put to use, there would be no depreciation rate. If asset put to use, then there would be either half rate or full rate depending upon the number of days it has been utilized. Okay. Then you should go understand the format and then start practicing the numerical which has been given in study material. I believe for Mr. S.C. Bose case, additional information while first floor using residential purpose, ground floor used for shop. Yes, we have discussed that, Mr. Nagaraja, because ground floor has been used for shop. So on the ground floor value, we can claim the depreciation. That would be half of the total value of the house property, and only the interest of 50% would be allowed as my business expenditure. Chalo. Moving on to our question of September 2025. So this is in front of you, Mr. Ram, a resident individual. Again, as I always say, first of all, check the requirement of the question. The question requirement is you are required to compute the total income, tax liability of Mr. Ram under both taxation regime as well as default and as well as optional. Okay, got it? Now the relevant information we have to always mark in the question. Mr. Ram, a resident individual aged 58 years is engaged in the manufacturing textile item. So whenever you read this manufacturing, always write it down. Additional debt concept could apply. As I've told you, it was not specifically needs to ask you in the examination that you have to calculate additional debt. It's not mandatory that they are going to ask you directly. But if the condition for fulfilled, then you have to calculate additional debt yourself. Under default tax regime, of course, it is not applicable. So we will calculate it under optional tax regime if the information is relevant for the purpose of calculation of additional depreciation. Statement of profit and loss show a net profit after depreciation before tax 52 lakh rupees. Okay. So this is our net profit. We are solving it under default tax regime. 52 lakh rupees. And information is there. After debiting, creating the following items. So whatever you are going to read, information in following items, they have either been debited if they are expenditure or either being credited if that are income. So the treatment of the following items already has been done in this 52 lakh. So if it is wrong treatment, we have to add back or reduce it accordingly. Depreciation as per income tax rule is 28 lakh, including additional depreciation on new plant and machinery of 1,50,000 rupees. So technically it is saying that this depreciation we have already claimed in this profit because the provision says we have already used the following expenditure. So 28 lakh we have already claimed. So we will not do anything with this, but additional debt is not allowed in case of default tax regime. So we have to add back the additional debt of 1,50,000. Understood? Now, interest amounting to 2,10,000 for short payment of advance tax as per section 234B for assessment year 24-25. So this interest has been claimed as expenditure to arrive at this 52 lakh. So it has been already reduced to arriving at the profit of 52 lakh. So if this interest is allowed, then we are not going to do anything. But if it is disallowed as per income tax, then we need to add it back. So what we should do is interest needs to be add back or not. Nagaraj asking the question paper, what month and year? It is September 2025 question paper, the last attempt paper. Okay. So because Almas is correct, Ram is correct, Nagaraj is wrong. So this actually payment of 2,10,000 is payment of interest on advance tax, which is a part of income tax. So in case of direct tax, you cannot claim the direct tax deduction, you cannot claim the interest deduction as well. So this should not be allowed and we have claimed this. So we need to add it back. Understood? 3,50,000 paid to a contractor for carrying out whitewash work at factory premises. Tax was not deducted at source on this payment and the contractor did not file his return of income for the relevant previous year. Now the TDS concept has been applicable. So total payment of 3,50,000 we have claimed as deduction to arrive at the profit of 52 lakh. So out of this 52 lakh, I have claimed full 3,50,000 deduction. What should we do now? Do I need to add back something or do I not need to add back anything in this case? Ms. Khushi Gupta saying allowed since it is not forming an offense or prohibition of law. I believe, Khushi, you are giving this answer for interest under section 234B. But it is for advance tax. And you might have gone through with the concept which say indirect taxes are allowed. Their interest is also allowed. But in case of direct tax not allowed and their interest are also not allowed. So this is the direct tax interest under section 234B. So it won't allow. Almas is correct in case of point number 3. Because TDS required to be deducted but not deducted. So in that case, 70% is still allowed. But we have claimed full 100%, 3,50,000. So 30% needs to be disallowed in this case. Of 3,50,000, 1,05,000 needs to add back. Okay. Mr. Ram needs to add back 30% only, not the full value. Next is contribution to Prime Minister National Relief Fund, 3 lakh rupees by way of check. So for this, you can claim deduction under section 80G, contribution to Prime Minister National Relief Fund. You cannot claim this under PGBP expenditure, but you have claimed it. So again, what do we need to do? We have to add it back. Expenditure towards advertising charges in a brochure of a political party registered under section 29A of Representation of People Act 1951. 40,000 paid by way of check. This is also disallowed because the provision specifically mentioned that any payment to political party for whatever reason would not be allowed under your business expenditure. So these 40,000 also disallowed. Now, interest on term loans obtained from a cooperative bank not paid before the due date of filing of return of income, 2,60,000. What do we need to do and why? Either write it down the section, why or what do we need to do? If you are saying add, either write down the section or tell me in short that why do we need to add it back? Almas is saying add. And she has wrote down the section 43B. Well done, Almas. Exactly, because interest payment on loan governed by section 43B, that is deduction on actual payment basis. And because the payment has not been made, so this deduction cannot be claimed. Because she's saying interest payment deduction is allowed only when payment is made within due date of filing of ROI. Well done, Kushi. Absolutely correct. 2,60,000 needs to add back. Contribution towards pension scheme of employee 1,50,000. The eligible salary and dearness allowance of the pension scheme referred to under section 80 CCD was 10 lakh rupees. So this provision was also in the format. Today we have discussed it. That as per section 80 CCD contribution, you can claim 14% of salary as deduction. So the contribution was 1,50,000 and the salary has been given 10 lakhs. So 14% would be 1,40,000. But you have claimed 1,50,000 deduction. So the excess 10,000 is going to be add back. Well done, Khushi. You have already given the correct answer of it. Very well done. Ram is saying, sir, if PVT is it 10%? What does that mean? If PVT is private, what is private? For which point you are saying, Mr. Ram, whether it's for point number 5, 6, 7. Private employee. Yes, exactly. Correct. Next is industrial power tariff concession. Now you need to tell me what should be the treatment of this. This is very interesting. You need to tell me what should be the treatment of this. Industrial power tariff concession of 2,50,000 received from central government. What should be the treatment of this 2,50,000? It is a kind of a subsidy or grant, you can understand. It is a kind of a concession. It is a kind of a grant or subsidy. So what do we need to do? Should we include it? Do we need to add 2,50,000? Do we need to reduce 2,50,000? Or do we just need to skip it? We do not need to do anything. What is the treatment of point number 8? Khushi is saying no deduction, no addition. Okay, anyone else? Who will answer that? What should be the treatment of this? Khushi has given the correct answer. Well done. If the payment has been received and already included, this is the case where the amount has already been included. Lokesh also correct. Already included in the profit of 52 lakh rupees. It's a kind of a subsidy and grant and it would be a business receipt. And we have already included this 2,50,000 in our 52 lakh rupees of profit declared. So we do not need to do anything. It is allowed income and it is formed already included in the income which has been given above. Now interest on bank fixed deposit, that is income from other source. Need to reduce. Cash gift from father, that is an exempt and income from other source. So that is also going to be the part of income from other source. This 150 and 90 needs to reduce. That was 1,50,000 and 90,000 need to reduce. Now we have some additional information. Expenditure pertaining to previous year, financial year 23-24 was allowed on due basis, but paid in current financial year in cash on 18th January 2025. So can you tell me the treatment of this? Expendi, read it very carefully. Understand what exactly the information is trying to convey to you, what is trying to communicate with you, what is trying to explain you. It says expenditure pertaining to previous year. There was some expenditure of financial year 23-24, which you claim deduction on due basis in that year. Suppose purchase. So purchase is allowed on due basis. So you have claimed the expenditure of that expenditure in last year on due basis. But it has been paid in the current financial year in cash on 18th January 25, 35,000. So because the amount has been paid in cash, which is exceeding 10,000 rupees. So if that has been paid in the last preceding previous year, 23-24, it has been paid in cash in that year, then it would have been disallowed in that year. But you have claimed the deduction in that year because it was not paid, it was due. So if it has been paid in the current year, and because it is exceeding 10,000 rupees, so we cannot allow it a deduction. We should not allow this as a deduction in the last preceding year. But we cannot change the last previous year provision. Already tax has been paid. So deduction would be disallowed in this year. This year, this would form part of your income. So that is going to be disallowed. The next one. Audit fees for the previous year 23-24 was 75,000. TDS deducted but not deposited in the relevant previous year. However, TDS was deposited on 31st December 2024. Mr. Ram is asking, sir, if it was below 10,000 cash, will treatment change? We have to still add it back. Even it's less than 10,000, we have to add it back because the question says this 35,000 deduction you have already claimed in that year. So if you do not add it back in this year, that would be allowed twice. And it's an income tax universal rule. No deduction can be claimed by you twice. No income can be taxed twice. So even if it is less than 10,000, still it's going to be add back. But let me tell you one thing. This is an additional information. That means this 35,000 has not been already included in that 52 lakh rupees treatment. So we are disallowing it because it has not been reduced from this current year expenditure. So we are disallowing it because of the payment. If it is less than 10,000, then no treatment in this year because this is an additional information. The net profit has been given 52 lakhs. So that means this is additional information. So this 35,000 has not been claimed in this profit yet. So even if it is less than 10,000, then we do not need to do any treatment because we did not claim this in this year. We have claimed in the last year. Why we are adding back? Because in the last year you have claimed the deduction, but in this year it has been paid in cash. So it should have been disallowed in the last year, but we cannot do so. That's why we are going to add it this year 35,000 in my 52 lakh rupees profit. If it is less than 10,000, that means we did not yet reduced it from my profit of 52 lakh. So it has not violated any provision of payment in cash more than 10,000. So it would not have been disallowed in the preceding year also. So we will not disallowed in this year. So let me correct you. If this is less than 10,000, then there should no treatment because these are additional information. That means these point having no treatment yet in this 52 lakh. And you will understand that thing in point number 2 also. Now, audit fee for the previous year 23-24 was 75,000. TDS deducted but not deposited in the relevant previous year. That means in 23-24. TDS deposited on 31st December 2024. That means after the due date of ROI of 23-24. 23-24 due date of ROI would be either July or October. And payment has been made in 31st December 24. So what would have been done? In the previous year 23-24, 70% must have claimed of 75,000 because no TDS has been deposited. is still that we can claim 70% of it. That means 52,500 must have been claimed from the profit of 23-24. The remaining 22,500 we can claim in the year in which TDS has been deposited. That is my financial year 24-25. So in 24-25, we can claim now 22,500. Now these are additional information. That means these 22,500 which we can claim in this year as a deduction did not had yet treated in 52 lakh rupees profit. That means this 22,500 has no treatment till now in this 52 lakh rupees. So that's why, because it's a part of additional information, so now we can claim this 22,500 as my extra expenditure. So 35,000 we have added back, and 22,500 we can claim as an expenditure. So after that, there would be profit 60,47500. Understand? Clear, students? So this was the treatment under default tax regime. Now under optional tax regime, we will take the profit as per default tax regime 60,47500. Now there's only one treatment needs to extra under optional tax regime, and that is allowability of additional depreciation. The additional depreciation we have added back, but now we will again claim it to arrive at the correct PGBP under optional tax regime. That would be 58,97,500. Dhruti Bhadani is asking, sir, can you please explain the additional information once again? Okay, let me explain you in a separate sheet. So we will have enough space. Now understand, the net profit was given in the question was 52 lakh. And there was some information has been given which has been debited and credited accordingly. So those were the points we have discussed. Now additional information means always in the question that it does not yet treated to arrive at this profit. Point number 1 was there, which says that there was an expenditure which has been claimed on due basis. 35,000 rupees expenditure which has been claimed in due basis in previous year 23-24 profit and loss account. So technically this 35,000 rupees expenditure has been claimed as expenditure in previous year 23-24 profit, and after that we have arrived at our profit of 23-24 for which we must have paid tax. ITR must have been filed, tax has been paid. Now what is happening in this year 24-25? The payment of this expenditure which has already been claimed as deduction has been made in cash. One day payment exceeding 10,000. Suppose because it has been paid in cash 35,000, we did not claim this expenditure from our this profit because we have already claimed this expenditure in the last year. So we cannot claim this expenditure from my current year profit of 52 lakh. That's why it has been given as additional information. But because the payment has been made in cash exceeding 10,000 rupees, so there would be a disallowability because payment exceeding 10,000 should have been disallowed 100%. So technically what should have been done, that this expenditure should not be allowed. But this has been done in previous year 24-25. And we have already claimed and filed return of income and tax has been deposited. So whatever we have already done, that cannot be changed. We cannot go into a time machine. We cannot change it. So whatever has been done in 23-24 has been done. But you violate a provision of 23-24 by paying the amount in cash. So what we can do? We can taxable that amount in the year in which payment has been made. So that's why we are going to tax 35,000 rupees in this year. Understood? If the payment has been mentioned in the question, suppose like this, that the payment has been made less than 10,000 rupees in cash. Suppose it must have been writing out that 30,000 paid via check, account pay check, and 5,000 in cash. Then there would not have been any treatment because we are just adding it back because you have claimed the deduction in 23-24 and violate that provision in 24-25. So we have no option left. We have to tax it in our current year 24-25. That's why we are doing this. Okay, Dhruti? Clear? It is just like that. Like in some year, you have claimed bad debts write-off deduction in P&L. Suppose in 21-22, you have claimed 1 lakh rupees bad debts writing off deduction in your P&L debit side. It is allowed. If it is write-off, it is allowed. And in previous year 24-25, there is recovery of bad debts. Out of those 1 lakh, you have now recovered some bad debts. So now we cannot change our bad debts allowed in 21-22. We cannot go back in a time machine and we cannot rectify it. But what we can do, because out of that 1 lakh of bad debt, how much amount, whatever amount has been recovered, that's going to be taxed under PGBP head. So exactly that's what we are doing over here. Ram is saying, sir, should we consider inflation rate for 35,000 since it is next year? No, not any inflation PV factor in income tax provision. Relax. Chalo. Next is. So that is September 2025 question. And again, I want to tell you one thing. Most of the points are very easy to solve. Like this additional information point may be confusing. It could be confusing for some student, point number 1 or point number 2 or both of it. But you can see the majority part of our question is so simple. There was nothing complicated and we are solving the examination question. We just solved May 2025 and now it's September 2025. The MTP question was more difficult than this because this question is so easy that only this point could make you little confused. And even if you have solved starting 10 point correctly, you will at least get 80 marks from the calculation of PGBP point. Even if this first or second point is wrong, still you will get a good marks from these PGBP solution. PV factor is given in question. Cost inflation index has been given, Mr. Ram, for capital gain calculation. So there must be some capital gain calculation in this question. That's why it has been given, not due to the or for the purpose of this PGBP provision. Okay. Sure. Moving on to next. Now this is RTP question. September RTP question. This is very huge. Let me tell you, Institute has provided you MTP, RTP, mock test also there, model test paper also there, case scenario, 25 case scenario. Matlab, technically, you have illustration in your study material. You have test knowledge question. You have 8 model test paper, 2, 3, 4 MTP, RTP, case scenario 25. So these are huge number of questions. And these MTP, RTP questions are that kind of question which can be asked in the examination. So if you are able to solve all 8 MTPs, RTPs, case scenario, I am telling you, you will find in the examination at least 40% questions would be exactly same. Only the figure would be changed, but the concept of at least 40% question would be same in the examination paper. And institute is again and again telling you that please read through study material. Everything is important. Do not go for selected study material. Do not go for any private coaching notes, etc. That is not relevant. That would be really dangerous for you. Everything is important. Please try and solve MTP, RTP, test knowledge question, illustration, and I can assure you, you can easily get 60% or more marks in every paper of your CA institute. So please focus on that and just try and practice those questions. Nagaraj is saying, I'm solving everyday case scenario chapter wise. Very good practice. You should try this and you will see your preparation will be stronger day by day. You will be more confident also. Mr. Lokesh, sir, how to register for MTP to give at the institute? I do not know, Mr. Lokesh. Kindly write it down an email to the Board of Studies. They will definitely tell you how to register, etc. But I believe everything is online. So if you will go and register yourself on institute portal, you will find each and everything would be there. Or either you can send an email also. Okay, so the next is question number 10 of RTP. And let me tell you, it is huge. It is very huge and interesting also. Mr. Shobhit, a resident. Okay, so first of all, first thing first, what do I need to do? I need to see what is the requirement of question. So I'm just trying to solve those questions as a student because I can solve that question from starting without even knowing what is the requirement. But as a student, what you should do, you require to calculate the requirement as per the question. And the question is asking you to required compute the total income of Mr. Shobhit, also the tax after TDS, so and so, if he's opting out of the default tax regime. So the good news that we have to only calculate TGBP income under optional tax regime. So optional tax regime calculation we are going to do. Mr. Shobhit, a resident individual, age 54 years, engaged in the manufacture of, and in the examination also, no, just be relaxed. As we are solving questions, not taking any tension. We are just reading the concept, we are applying the provision, and there is the answer in front of us. So be that habit that you should control your nerves. If you will be nervous, you will solve a question which you can solve at home easily, but you will going to do mistakes in the examination. And this is scientifically proved. When you are in pressure, normal things even you cannot do. Have you seen the movies, na? In horror movies, you try to start a car, वो car भी start नहीं हो रही होती है because you are in pressure, because the thing is coming to you, ghost is coming to you, no? So you are in pressure, so you cannot able to insert the key in the car. Why? Because you are under pressure. So just be relaxed. Not that relaxed, but just control your nerves. Don't panic. Don't panic. Just ignore that thing. And there's only one way to ignore that situation of being nervous. That is preparation. If you are well prepared, if you have gone through with the case scenario, MTP, you have solved, revised your topic properly, practices your MTP and RTP, etc. This is the only thing that will give you that confidence that you will not be bothered about the paper. You would be just bothered about how to solve it. So do not be in that position when I have seen the students start shaking when the paper is distributing over there. So that is only would be the case when you are not prepared. If you have planned properly, if you have prepared properly, if you have practiced properly, then there would not be that kind of nervousness. A normal nervousness is obviously would be there for each and everything. I cannot be say that you would be 100% lack. There would be nervousness is good, but don't get panic. Panic thing makes you do mistakes. So be nervous, it's okay. And always say all is well, all is well. Sab theek ho jayega. He follows the mercantile system of accounting and regularly files his return of income. Very good. The profit and loss account for the year ended on 31st March 25 shows a net profit of 57,25,000. So this is my profit after debiting crediting the following. During the year, Mr. Shobhit purchased plant and machinery for 55 lakh. Very interesting point. And do one thing, whenever you go through with MTP and RTP and these case scenario questions or past year questions, if you are trying, so you will see in a question, if there are 10 points, 7 or 8 points are normal. You do not need to bother about it. You would be able to solve those points easily. There would be only 1 or 2 point which is different, as we have solved the September 2025 question paper, and you can see that additional information point was only different points which was not being asked in the earlier question. So mark those points, because when you will have only 1.5 day before examination, you will give some examination, and after 1.5 day you would be another examination. So in that 1.5 day you have to revise all the question also. So that won't be possible that you are able to revise 300 questions. How do you revise it? You will revise only those important points you have marked in those questions. That is possible. Out of 300 questions, there would be maximum 100 points important, or maybe less than that. If you revise it once or twice, that 100 would be comes to 40 important points. And if you are able to revise those 40 points before examination, that means you have revised all the 300 questions. So always mark those important points that would really help before examination time. So during the year, Mr. Shobhit purchased plant and machinery for 55 lakh, for which he took loan from a scheduled bank. Date of loan is 1/5 2024 and the rate of interest is 11%. The asset was acquired on 1st July 2024 and put to use from 1st September 24. The entire interest amount is debited to the profit and loss account. Now, there is a very interesting concept behind it, and I believe you must have gone through with it also, that up to the date of put to use, all the expenditure, up to the date of put to use, all the expenditure needs to capitalize. So what we did, we have capitalized, we have claimed all the interest as revenue expenditure. You can see the entire interest amount has been debited to P&L account. So what he did, the entire interest on that loan which has been taken from 1st May 2024, if you will calculate it on 55 lakh rupees with the rate of 11% from 1st May 2024. So that means for 11 months. The interest would be 5, 5, 4, 5, 5, 5, 4, 5, 8, 3. This whole amount of interest has been claimed as revenue expenditure, which is wrong. Because up to the put to use, till put to use need to be capitalized. That would be from May till August. So from May, June, July, August, the 4-month interest needs to be capitalized. That should not be allowed as revenue expenditure. That should be added back to the cost of the asset. So we have to find out the 4-month interest, and that would be 20. So the interest need to be disallowed as revenue expenditure for 4 months. It would be 201667. And you know, this will impact your depreciation because the value of asset was 55 lakh. So we were supposed to claim depreciation on it, but no, we need to add this value as a capital expenditure, put to use expenditure. So now we would be able to calculate depreciation on 57 lakh 01667 value. This would be the value for the purpose of depreciation that we will claim later. Depreciation we will claim later, but this would be the impact of this point. So generally what happens, the later points, the additional points are having tricky points. But in this question, the first point is most tricky. Other points are easy. So this should be the last point, but it is first point. So if there is any point which finds you difficult or you are not able to understand in the examination, suppose the first point is like this, then you can skip it. You can solve point number 2, 3, 4, 5, 6 firstly, and you can solve this point later on also. On 1st April 24, the production manager working in the factory of Mr. Shobhit took voluntarily retirement from the services. Mr. Shobhit paid him 8 lakh rupees as compensation for his services under voluntary retirement scheme. So under VRS, whatever compensation you are paying, you can claim only 1/5. Correct, Mr. Ram? He answered correctly. 1/5 allowed only. And you have claimed the full value. So 4/5 need to be added back. That would be 6,40,000. Clear? Next is third point. It is again very, very interesting point, very important point. It's a very good question. So I don't believe that this kind of question would be asked in the examination, but yes, some point of these question can be asked because that is a huge question. You need at least 40 minutes to solve this question. At least 25 to 35 point you need to solve this kind of question because a lot of information. So this question is very important for the purpose of practice because so many good points in this question. Mr. Shobhit purchased raw material from Messrs. Kamal and Sons, a micro enterprises. So section 43BH applicable on micro enterprises, you have to pay within 45 days. And Hitesh and Son, a medium. So 43BH not applicable on medium. It is only on micro and small. So that 43BH is not applicable in Hitesh and Son payment. Payment was 51,000 and 75 respectively on 15th March 25. As per written agreement with them, both the payment has to be made by 10th April 2025. Shobhit made the payment to Kamal and Sons on 9th April. So this payment has been made before the agreement date as well as within 45 days as the requirement of MSME Act. And Hitesh payment is after 45 days, but MSME not applicable on Hitesh because it's a medium enterprises. So there would not be any disallowance in respect of third point. No treatment. Now what will happen when you will have this kind of information in the examination? So our brain says that कुछ तो करना होगा. ऐसे कैसे? Why not applicable? There should be something. I have to do something with this. There must be something disallowed. Even when your logic would be saying that, look, it's a micro enterprises, payment has been made within 45, so no need to do anything. And that is a medium enterprises, so provision not applicable. So logic is saying don't do anything. Your knowledge is saying, your logic is saying don't do anything, but your mental status is saying no. It has been given in the question. So there must be some treatment. So do not do these kind of mistakes. Trust on your knowledge. Trust. If maybe there's some information, there are some points in the question which do not have any relevance. Examiner just frame those points to just check whether you are in a correct mental status or not. Whether you have promised yourself that I will do something for all the points. That's I'll promise myself before the examination. Even that my logic is saying don't do it. No, I am going to do it. So this is a test of your knowledge. So there could be possibility when you do not need to do anything for any point which looks so important for you. But that is also matter that your knowledge and your practice will make you understand it. So if you are able to solve third point with me right now, what is happening, if this kind of point is going to be asked in the examination, now you won't do this mistake. This is the beauty of these classes. Whatever we are solving with you, and if you are actually listening what I am saying, what the faculty is trying to communicate to you, now this point would be always freeze for your examination. Point number 1, point number 3, what we are discussing over here. Absolutely, that only coming, sir, whenever see info like this. Correct. Exactly, Miss Gayatri. Mrs. Gayatri. It's purchased raw material already in net profit. Yes, he has claimed deduction of these 51,000 and 75,000 and it is allowed. Nothing to disallowed in respect of point number 3. Now, fourth point, we have discussed this kind of point. He contribute 20% of basic salary to the account of each employee under a pension scheme referred to in section 80 CCD, which is debited to P&L account. Basic salary of the employees aggregate to 10 lakh and dearness allowance is 40% of basic salary and it forms part of retirement benefit. So again that 80 CCD provision what we have discussed, only 14% is allowed, the balance is going to be disallowed. So that's you need to do yourself because we have a short of time. So only important point we are going to discuss. So this is for yourself. The answer has been given. So you can find it out. Depreciation debited to profit and loss account is 27 lakh 50,000. So this is the depreciation as per accounting provision need to add it back. Clear? Then he received 13,850 as income tax refund, out of which 3,850 is interest on refund. So we have to reduce 13850 because it's an income information. So we need to reduce 13,850 full. Out of that, 3,850 would form part of my income from other sources. Now here is additional information, and again point number is important, and it is additional because these information has not been any effect on the profit which has been given above 57 lakh 25,000. We have not done anything regarding these information yet. Mr. Shobit purchased a new computer on 31st August 2024 and was put to use the same day in his office. The payment was made as under 28,000 paid in cash at the time of purchase of new computer on 31st August 2024. So this 28,000 has not been any impacted yet on the profit which was 57 lakh 25,000. And any payment exceeding 10,000 whether revenue expenditure or capital, this is disallowed. So what do we need to do? Nothing. If it is not in cash, we can claim depreciation on it. But because it has been in cash, so it would be disallowed. But we did not claim it earlier from my profit. So we do not include it for the purpose of any kind of deduction. No need to add it. No need to claim depreciation on it. 25,000 paid by account pay check on 5 September 24 as balance of new computer. So we can claim depreciation on it. 40% of this we can claim depreciation that could be reduced. 10,000 rupees. Half depreciation, no Mr. Ram. On 5th September, that means it's more than 180 days. So we can claim full depreciation of 40% on balance of computer. WDV of different asset as on 1st April 24, plant and machinery value has been given 8 lakh. So we can claim 50% depreciation of it. Factory building, we can claim 10% depreciation of it. He paid 50,000 as life insurance premium taken on the life of his father who is dependent. So because these are additional information, no impact has been on the net profit which has been declared as above. So we do not need to do anything for it. No insurance treatment we will do. Withdraw cash, nothing to do. He sold a house property. So that is again no treatment on my PGBP. 1 crore long term, etc. So the depreciation we have to calculate, and that is important. So you must have seen that we have discussed this provision. So now we need to claim depreciation on this value. So depreciation on this asset 57,01667. We have to claim 50% of depreciation of it. That would be 855,250. And one more important thing, because he was engaged in the manufacturing of spare parts of car, and we have purchased new plant and machinery. So additional depreciation would come into the role. We have to calculate it automatically if the relevant information has been given. So additional depreciation would be 20% of this value. And that would be 1140333. That would be the value of additional depreciation. So please make these short notes for the purpose of solution of every head of income. So if there is a PGBP head, you should write it down what deduction we cannot claim under section 115 BAC. And there should write it down a keynotes that what are the keynotes to understand. The keynotes are additional depreciation you need to check. In case of scientific research, in-house research expenditure is allowed under both regime. If there is depreciation, you have to find it out whether it's a part of additional information or already having the treatment. On the basis of that, you can find it out what treatment we should do regarding the expenditure under this PGBP head. Okay, so any query from your part, student? Mr. Ram wants to ask something. Yes, Mr. Ram, proceed.
Sir, I was going through the provision regarding the employee contribution to the PF and pension, sir. In that, I gone through two different things, sir. 14% for government employee and 10% for private, sir.
Correct.
And in the solution, the questions, the two questions which we solved, we calculated for 14%, sir. But in the question, it was not mentioned government. So
You can assume also because in the first question it was been mentioned because she was the widow and I guess that was written that he or she was the government employee. Her husband was a
husband
government.
was, yes, sir.
Correct. In this question, it has not been mentioned, but there is also a concept that assumption can be written down. So you can assume it that we have assumed it's a government employee, and in that situation, you can claim it's 14%. So there is a very important thing also in the examination. If you are assuming something which has not been given, then you have to write it down in the assumption that we have claimed like this. As you must have seen in the question we have solved today, there's a question in which section 44 ADA was applicable. 49 lakh 60,000 was the advocate receipt. So either you can declare profit 50% of 49 lakh and 60,000 or there would be a profit what we have calculated 7 lakh something. So we have to write it down this also that we are assuming that assessee would maintain books of accounts and will conduct the audit. So the profit we are considering is 7 lakh 47,000 rupees. So there would be some assumption you can take and you can write it down clearly over there.
Okay, sir. Thank you.
Welcome. Anyone else, students? So these kind of question you have to student, you have to go through it. Those will give you a lot of knowledge and clarity that how to apply the provision in the examination. So this will strong your preparation for the purpose of examination. Any more queries, students? Aditya wants to ask something. Yes, Mr. Aditya, go ahead.
Sir, I am audible, sir.
Yes, you're audible.
Sir, how we take a depreciation on 15%, 20%, 40%, sir? On that depreciation, I have confused on depreciation, sir. How much percent we can take, sir?
No, there is no as such percentage we can take. There are actually rates of depreciation. So in the PGBP chapter, if you'll go, there is rate of depreciation which has been notified. Like on computer, the rate has been notified 40%. On plant and machinery, it's 15%. On car also, it's 15%. So these rates have been notified. If you will go to the study material, you will find the rates of depreciation has been specifically over there. And there is a concept of number of days of utilization. In certain cases, if the number of days less than 180, the DAP rate would be 50%. So the rates you have to learn from the study material, rate table has been mentioned over there.
Hello, sir, there is any negative marking in intermediate exam, sir?
A negative marking in which case? MCQs?
MCQs or descriptive, sir, there is any negative marking
I don't think so. There
in
is any
intermediate, sir?
negative marking regarding it. There's no negative marking, I believe. And if you have any that kind of query regarding the negative marking or the steps marks, how it will be given, so you can write it a mail to the BOS. They will definitely going to clarify regarding that.
Okay, sir, thank you.
Welcome. Okay, Mr. Ram.
Sir, I was asking about the depreciation rate, no, sir. But for motor cars, there are different rates like 30%, 15%, and 45%, depending upon the dates, sir. So, should we need to consider all the rates?
No, not as per the date. You do not need to remember this. Just apply what are the rates applicable for your assessment year. So there are rates which could be different initially years, but that is not relevant for the purpose of examination.
Okay, sir. Thank you.
Welcome. Anyone else wants to ask anything? Mr. Ram, you wants to ask something? Or yes, go ahead.
No, sir. Last question. I
Last.
forgot to. Thank you.
Mr. Bhargav, I guess we can close the session as there is no query left. Okay.